Hello everyone and welcome back to Fun with Fitzy. This is the third video on cash flow statements and it is chapter 18 video 3. We are going to do an example cash flow statement. We're going to be working on page 874 of your textbook and it's problem 18-3A. Chapter 18-3A. Here is a problem from our textbook that we're going to work on. We're going to complete the cash flow statement. The instructions down here say prepare a cash flow statement for the year ended December 31st, 2003 using the indirect method. So the company is Cousin Tommy's Toy Company, and as you recall, you need three things to prepare a cash flow statement. You need a comparative balance sheet, so we have that here. We have our balance sheet from 2002, 2003. So 2002 will be the beginning of the year, and 2003 will be the end of year 2003. We don't actually have the income statement, but we have the information from the income statement that we need. And we have additional information. So those are the three things we need. So if you go to my website, section 9.1, point to cash flow, and if you scroll down, you're going to find a blank cash flow statement. So you're going to click on this. And you're actually going to make a copy of it. So go File, make a copy if you want to work along with me. Okay, however, I have the completed 18-3A cash flow statement here. I'm going to open it up and I'm going to walk you through how I did it. So the first thing I did was make my heading, Cousin Tommy's Toy Company. And again, it's Cousin Tommy's Toy Company. We're making a cash flow statement, so I'm going to put cash flow statement. And again, it's who, what, when. My when is for the year ended December 31st. Unlike a balance sheet that's a point in time, this is a period of time. Okay, so we are going to do a complete cash flow statement. And as you recall from a cash flow statement, we start off with, we have our three sections. We have our cash flows from operating, we have our cash flows from investing, and we have our cash flows from financing. So I'm going to walk you through how I did all three of these. The first thing we're going to do is type cash flows from operating activities here. Then we're going to put our heading net income. Let's go see what our net income is here. Okay, this is a little bit complicated, and depending upon when we do this section in the course, I'm not sure if we do this after chapter 14 and 15 or before. This year we're doing it before, and as I mentioned in class, retained earnings is all of the net income over time less any dividends given out. So they don't actually give us the net income. So this question here is double whammy. It's getting us to calculate net income based on information we know and then complete a cash flow statement. Given the fact I want you just to complete the cash flow statement, or we're just learning about completing the cash flow statement, let me just show you how we did this really quickly. I put here in the note beside where I'm going to put this video when I complete it is problem 18-3A. Note the net income is $38,000. How do we get that? If you know the formula, beginning retained earnings plus net income, because it's retained earnings. Retained earnings is all net income over time. So whatever you had in there at the beginning of the period plus net income minus any dividends given equals ending retained earnings. So if you calculate that, we would have had retained earnings at the beginning of the period of $180,000. Let's do this in a special spot in the cash flow statement. Let me just type this out here. So we would have had $180,000 plus net income minus any dividends. So let's see what the dividends are. It says cash dividends of $27,000 were paid. Equals ending retained earnings. So in this case, our ending retained earnings is $191,000. If you rearrange this formula, you will isolate net income and you will get your net income to be $38,000. So I'm just going to leave that there. I'm just going to leave that there so you guys can rearrange that. So once we calculate our net income, we're going to put the $38,000 here. Okay, and then you're going to type in adjustments to reconcile net income to net cash provided by operating activities. I'm going to provide this to you in class I don't want you memorizing stuff like this, but I'll just write it on the board for you. But it's not too hard to remember because basically this is what we're doing. We're adjusting our net income so that it is net cash provided by operating activities. So as you recall, the first thing we're going to do is look at our current assets section of our balance sheet. So we're not going to look at cash. We're going to start with accounts receivable. So in 2002 it was $52,000. In 2003 it was $49,500. So that has gone down by $2,500. So as you recall, let's see if I can open that cheat sheet up again. When a current asset goes down, as it has here, you add it back. Current asset went down, you're going to add it to net income. So I added that 2,000, I made it positive here. Then, so I've typed decrease in accounts receivable because it went down, we're going to make that positive. Then if you look at your inventory, here it is. It was $142,000 at 2002, and now it's $151,450. It's gone up. So when a current asset goes up, you subtract it. So the difference from the beginning of the year to the end of the year was $9,450. All you do is subtract them to figure out what it was. And because it went up, we're going to type increase in inventory, and we're going to make it negative here. Then there's a current asset. There's your prepaid expenses. They went down from the beginning of the year to the end of the year, so we're going to add them back. And they went down. If you subtract the end of the year, the beginning of the year from the end of the year, you're going to get this number. And because they went down, we're going to make them positive. We're going to add it back. If we look at our cheat sheet, if it goes down, add it back. And then the next thing we're going to look at is our accounts payable. Because we're done our current assets, we're going to look at our current liabilities. So current liabilities, here they are. Accounts payable went down. So you remember when a current liability goes down, look at our cheat sheet. It went down, so you're going to subtract it from net income. We're going to subtract it from our net income. And then the last two things we need to look at in this case, the other items from our income statement. We're going to look at amortization and any gain or loss on sales. So let's take a peek. Any expense items we're going to add back, any gains we're going to deduct. So let's go take a peek at the information we were given. There it is here. Operating expenses include amortization expense of $42,000. Because that $42,000 was a non-cash expense, we're going to add it back to our net income because we subtracted it as an expense in the accrual accounting system. We're going to add it back because it didn't actually affect cash. And of course, there's a loss on sale. Let's look at that. In item number 4 here, it says equipment was purchased for $95,000 cash. So you're going to see we're going to spend that cash in the investment section. It says, in addition, equipment costing $22,000 with a net book value of $10,000 was sold for $8,100 cash. This $8,100 cash that we received will go in the investment section too. But because there was a net book value of $10,000 and we sold it for $8,100, we have a loss on sale. So that loss on sale right here of $1,900 is an expense, so we're going to add it back. Again, if you look at my cheat sheet, loss on sale, we add it back. Okay, so those are all of the current assets and current liabilities. After this current asset, we have land. So there's no more current assets. And then after the accounts payable, there's no more current liabilities. So we are done at the operating section. So we're going to add this plus this plus this. There's a formula here. You can see I added it all up, equals sum, this cell all the way down to this cell. So if you're doing this manually, you're going to go positive 2,500 minus plus minus plus plus. You should get this 39,900. Okay, so we're going to add this back because it's positive to the net income, and we're going to get net cash provided by operations of $77,900. Section 1 done. That's the hardest part. Then we're going to move on to our second part. Cash flows from investing. So again, remember, this is a heading. We had cash flows from operating. Now we have cash flows from investing. If you recall, for this section, We're going to look at our investment section and our fixed asset section of our balance sheet. Let's go back to our picture. So we have no investments unless they tell us otherwise down here. So our equipment changed. Our equipment was $155,000 and it went up to $228,000, and our building changed as well. So we got to go to the additional information here and look at this stuff and figure out why. So our land changed and it said it was sold for cash at cost. So if we had 130 and now it's 100, our land changed by $30,000 and we got that in cash. There's our sale of land. We sold it at cash for $30,000. So our cash went up. Our cash came into the company. So we're going to add $30,000 here. Now let's look at the equipment. Equipment was purchased for $95,000 cash. Cash went out of $95,000. So there's my cash going down because it went out. And then the second piece there, it says, in addition, equipment costing $22,000 with a net book value of $10,000 was sold for $8,100 in cash. So cash came into the company, so we're adding it back. So that's all of our fixed assets and investments that changed. So that's the end of that section. So if you add this, subtract this, add this, you're going to get a net, and you can see I used a formula here. And that is a negative $56,900. So cash used, cash went out. There was a net cash outflow in the investing activities section of this cash flow statement. So we put the word used here. When it was an inflow, we put provided. When it was an outflow, we're going to use the word used. So net cash used by investment activities was $56,900. And then finally, we're going to look at our financing activities. So if you recall from our cheat sheet, our financing activities, we're going to look at our long-term liability changes and our equity items. So if we go to our long-term liabilities, well, there's one there, bonds payable. It was $300,000 at the beginning of the year, and now it's gone down $50,000 to $250,000. Let's see if we used cash for those bonds. Okay, it says bonds were redeemed at face value by issuing common shares. So in other words, we gave people that we owed money to who bought bonds, we gave them common shares in exchange for what we owed them. So this company, in effect, did not affect cash by selling those bonds. So we are just going to indicate at the bottom of the cash flow statement, note, there was a significant non-cash activity. The redemption of the bonds was for issuing common shares. So we're not going to include that up here because it was not affecting cash. Okay? So the bonds changed, but that was not cash. And then, of course, the common shares also went up by that $50,000, and that was, again, because of that trade. So common shares is not going to go in there either. The last item we have was retained earnings. And, of course, what we needed there was our net income and if there were any dividends. Any changes in return and retained earnings is going to incorporate the net income or any dividends that are given out. Let's see, we've looked at this item. We got the amortization, we looked at this item, and we have not looked at number 3. Cash dividends of $27,000 were paid. So cash was going out for $27,000. So there we go. We're going to put our heading cash flows from financing, payment of dividends, cash was going out $27,000. And that's all, because if you look back, we're done all of our equity and long-term liability items from our balance sheet. So that's a negative $27,000 cash, net cash used by financing activities. So we're going to go back up here. We have net cash provided by operations, net cash used by investing, and net cash used by financing. So we're going to take those 3 numbers and add them together. And that's going to give us a negative number. So we're going to put a net decrease in cash here. And again, if you recall from our second video where I say step 1 of the cash flow item was to look at the net change in cash. Well, if you look at the net change in cash here, we had $45,000 and it went down by $6,000 at the end of the period to $39,000. So $6,000. So again, this is the double check here. $6,000 is actually a formula here. We added these 3 items, this plus this plus this, and it equaled net $6,000. Or you could have just got the negative $6,000 from the change in cash. But those 2 numbers must equal. The three numbers that you get from operating, investing, and financing must equal that change in cash, whether it goes up or down. And again, you have to put the 45,000 at the beginning and the 39 at the end. So cash January 1st was 45, cash December 31st was 39. So really, this plus this equals the cash at the end. And that's the end of the cash, how I prepared this cash flow statement. This completed cash flow statement is on my website. You know where to find it. Hope this helps, and we'll see you in the next video.